SMCI was trading in the low $30 as the market closed the week, roughly $30.64 in the last regular session, with a day range around $30.15 to $30.85. The company's 52-week range is wide, about $25.71 to $66.44, which tells you everything you need to know about volatility. This stock has been to the moon, the market's moon, and come back. Why does this matter? Because when a stock swings this dramatically, the story isn't a single paragraph, it's a novella. Some folks call SMCI a pure-play AI infrastructure company. Others call it a fantastic product with dicey execution. I call it interesting. Let's get specific. The fight in 2 sentences: demand is huge, execution is messy. At the high level, the tug-of-war looks like this: bull thesis, secular demand for AI and high-performance computing, HPC, racks and systems is enormous. Supermicro is a pick-and-shovel play to that build-out. Bear thesis, recurring quarterly misses, large operating cash burn in Q1, rising leverage, and customer concentration make the path bumpy. Both are true. The only difference is how much weight you put on. Can they fix execution soon? I think the Q1 missteps are temporary, so I keep a buy and a price target we will see later. I'll explain why. Let's put the big Q1 facts on the table first. Q1 revenue, reported below consensus, management said timing shifts. Q1 non-GAAP diluted EPS, 35 cents, below some expectations. Q1 operating cash flow, negative $918 million, cash used in operations. That's a huge swing and the most headline-grabbing number this quarter. Cash on hand, $4.2 billion at quarter end, with bank debt and convertible notes $4.8 billion, giving a net debt of roughly $575 million, i.e., more debt than cash. Non-GAAP gross margin, 9.5% in Q1, low for a systems company at scale and below historical highs. Q2 guidance, management guided revenue in the $10 to $11 billion range for Q2, meaning sequential growth if shipments convert. They also reaffirmed a higher full-year target, roughly $36 billion, signaling confidence in longer-term demand even as the quarter lagged. Red flags, the things that keep me honest. Massive Q1 operating cash burn, negative $918 million in operating cash flow is scary sounding and real. That kind of cash consumption reduces the margin for error if further slowdowns or delivery reversals occur. Gross margin pressure and compression, margins were sub-10% for several quarters, and Q1's 9.5% non-GAAP gross margin is not where shareholders want them. Tiny margin changes have massive valuation effects. Net debt position and convertible notes, total cash $4.2 billion versus bank debt plus convertibles $4.8 billion. That flips the balance sheet to net debt and raises dilution risk if convertibles are enforced or refinanced poorly. Inventory and working capital risk, inventory levels jumped, company flagged increases and a $259 million inventory write-off over the prior 12 months. Rising inventories plus lumpy sales can create write-downs and margin slippage. Customer concentration, 2 customers were greater than 10% of Q1 revenue. Large customer concentration means shipment timing changes from a single customer can swing results materially. Recurring guidance misses, trust haircut. This was the 6th consecutive quarter where revenue missed estimates. The market applies a trust haircut to guidance from management, and that's hard to reverse quickly. All of these are real. If you want to be conservative, you treat the first 2 as deal breakers until you see stability. But I want to balance that with the tailwinds. By the way, if you are benefiting from the content so far and want more like this, like the video, it means much to me, or hit the subscribe button and comment the word more. Just go ahead and type the word more so I know. Now that you have commented, let's continue. The reasons I remain optimistic. Huge secular tailwinds in AI and HPC. The world is building racks of accelerators, training and, increasingly, inference clusters, and Supermicro is a pure hardware provider in that value chain. As long as the AI data center build-out continues, the market exists. Think, pick and shovel to the AI gold rush. Large backlog and sequential guide. Management guided $10 to $11 billion for Q2 and raised FY guidance. That suggests orders are real but timing slipped into later quarters. Timing misses are painful, but better than cancellations. Strong nominal liquidity. $4.2 billion in cash is meaningful. Even with operating cash burn, this gives Supermicro runway to execute and fund growth while they stabilize operations. Product differentiation in cooling and system design. Supermicro's direct liquid cooling, DLC, and high-density rack designs matter for hyperscalers optimizing power and cooling for GPUs. That's a real technical moat for dense AI deployments. Customers care about TCO, not just sticker price. Geographic diversification and customer expansion. Asia accounted for a big share, roughly 46% of Q1 revenue, US 37%, and international strength helps offset any single region weakness. Geographic diversification reduces single market risk. Partner and ecosystem proximity, NVIDIA et al. Supermicro is a key systems partner for GPU rack customers and works closely with accelerators from major GPU vendors. That's sticky business if you can deliver. These positives are why I view the Q1 issues as temporary rather than structural. So long as the company can convert backlog into sales and margins normalize, it can hit a price target of $70 in the next 2 years. Translating the 3 financial statements, plain English walkthrough. If you're buying a company, learn to read the 3 statements. I'll give the short version as a checklist you can use. Income statement, profit and loss. What matters? Top-line growth, gross margin, operating margin, net income trend. SMCI snapshot. Revenue grew dramatically over several years, AI ramp, but recently growth stalled and showed quarter-to-quarter timing differences. Gross margins have declined to below 10%. That's the headline risk because a 1% margin swing can move valuation meaningfully. Balance sheet. What matters? Cash, debt, inventory, and equity. SMCI snapshot. Cash $4.2 but debt and convertibles $4.8, net debt $575. Inventory has risen and there were write-offs, recently $259 in write-downs. Convertible notes represent dilution risk if they convert. Cash flow statement. What matters? Operating cash flow, sustainability, CAPEX, and free cash flow. SMCI snapshot. Negative operating cash flow of $918 million in Q1 is the red flag. CAPEX was modest, $32 so the cash burn is operational, working capital, inventory, timing, rather than CAPEX-led. That suggests the core business can be profitable when timing normalizes, but you want to see ops cash flip positive soon. Analyst consensus is mixed but tilted neutral to positive. The 12-month average price target across analysts was in the mid-$40 range, investing consensus $48.5, with a split between buys and holds. There are bulls who see multi-rack deals and bears focused on execution. My $60 target is a bit above consensus but consistent with a scenario where execution stabilizes and multiple expansion occurs. Also, short interest remains elevated, roughly 89 million shares short, around 19% of the float, which is a structural volatility amplifier. High short interest means any real positive surprise can amplify upside, and any disappointment can accelerate downside. Trade size accordingly. Note this as well. Do you want peace at heart? The next day John seeth Jesus coming unto him, and saith, Behold the Lamb of God, which taketh away the sin of the world. John 1:29. Fear God, and give glory to him, for the hour of his judgment is come, and worship him that made heaven, and earth, and the sea, and the fountains of waters. Revelation 14 verse 7. I appeal to you to fear God and obey his law. For his commandments are sure and his word everlasting. Do not be afraid, do not be discouraged. Want more information? Please check the description section. That's the end for now. If you have watched until the end, drop a comment like this: I stayed until the end. Just comment that I stayed until the end. When I see this comment, I will give you a heart. 3 more favors I request from you. First, like this video, subscribe and then turn on the notifications bell. If you do this, you greatly encourage me to continue bringing to you insightful information. Do not miss out on our future videos full of insight. All I am asking is your subscription. Thanks for joining us today. Your support means so much to us. Do not hesitate to share this video to help someone who may benefit. I recommend that you watch the next video, subscribe to the channel and share your thoughts about today's video. Wish you God's blessings and care. Wait, watch and pray. See you in the next video according to God's will.